The first week of September hasn't been any easier. It's been quite a ride. Will all of this volatility threaten the strong stock market performance that we have seen so far this year?
Yes, it has. I mean, I think, globally we've had a very good run in both credit and equity. This region, Asia and emerging markets, has been a clear laggard, really because of the trade issue and also a slower China growth. But in the last week, we've had a bit of more optimism. I think really from oversold levels. Obviously the Hong Kong situation improving, a bit more positive sort of policy response from China, and I think a little bit more clarity on Brexit, that we're not going to go into necessarily going for a hard Brexit. So that's made markets a bit more perky, people coming back from holidays, but I don't think there's really been any change of fundamentals.
Does that mean that the surge in bond yields is not really expected to last here?
I mean, we're expecting bond yields to carry on, lower for longer. The credit side still looks pretty good. We're not seeing any real deterioration in default rates. Maybe one has to watch the high yield space in the US just on the commodity side, because you're taking a risk on commodities. I think otherwise, people continue to search for yield, and where last year credit sold off a lot, this year it's looking more positive. Asian credit and emerging market credit has held up very well, despite the wobble in Argentina recently. We expect that to continue. We expect credit to widen a little bit in Asia and emerging markets, but we have the beneficiary of rates being cut in the US, so we've got more positive returns. Whereas we're not really seeing any credit widening within the global credit space. So, yeah, positive environment.
Yeah, you are neutral, though, on emerging markets. I just wonder, though, if you're seeing any good opportunities there on your search for yield.
Yeah, Paul, we're neutral on emerging market on the equity side, but we are selectively overweight on the sovereign and the credit side, partly because the returns are looking much better than Europe and the US. Look, what's the story on emerging markets is it's cheap. It's lacking a catalyst to go up. We're still seeing earnings downgrades, particularly in the manufacturing or the supply chain areas, particularly from Korea and Taiwan. Although those downgrades are beginning to be downgraded less, but we still think we'll have more downgrades coming up. And so, really emerging markets in Asia is really held back by the trade issue as opposed to benefiting from the rates going down.